Hi everyone. As we know, there are a few delays, so people will be filtering in, but we're going to get the program started. It's going to be a really terrific one today. I'm Susan Sylvester. I'm the director of the Ronald Reagan Building and International Trade Center, and I just want to welcome you to the building, actually on behalf of the U.S. General Services Administration, who owns it. A lot of people are really surprised that this building, which happens to be the largest in Washington, is a federal facility. Probably even more surprised to learn that the International Trade Center does not operate on taxpayer funds. We have to earn our own way, so to speak. So it really is an unusual building in many respects. We're really excited to be able to collaborate today with the Global Assets Project of the New America Foundation and the Calvert Foundation and OPIC on today's panel discussion regarding a really innovative microfinance strategy. I know you're going to find it fascinating, and it's really good to see the crowd here this morning. We have a lot of prominent business leaders and philanthropists who have an interest, a keen interest in certain social issues that we face as members of the global community. And we believe that the importance of microfinance strategies and leveling the global playing field really can't be stressed enough. So thank you so much for coming today. I mentioned that this is a federal building, and I should say that Congress established the International Trade Center to create and enhance opportunities for American trade, commerce, communications, and cultural exchanges with other nations. And just briefly, we fulfill that mission in three essential ways. One, we're home to some of the country's most influential federal agencies. And am I touching the laptop and I shouldn't be? Is that okay? All right, sorry. All right. Such as the Department of Commerce's Trade Information Center is here, headquarters for the Customs and Border Protection, and USAID, U.S. Agency for International Development, and we have several people I know who were at least former USAID members here today. Secondly, we work with a wide variety of international trade entities, government agencies, embassies, trade associations, educational groups, on a plethora of international trade issues. Last year we held 300 events just dealing with international trade issues, all open to the public, and that's besides all of the other sorts of events that go on here all the time. And third, we're a member of the World Trade Centers Association, and as such, we're designated the World Trade Center Washington, D.C. So we work very cooperatively and collaboratively with our sister World Trade Centers around the world. There are about 300 members. And I think we might, Hosai, do we have some information if people, where is that? Oh, at the registration desk, if you're interested in knowing more about what we do here, just downstairs at the desk. Before the program begins, I just want to say thank you to the Global Assets Project of the New America Foundation and the International Gateway for working on this collaboratively, for bringing this group together. It really is an important issue. And I want to turn the program over to Ms. Jamie, where is she? Zimmerman, right here, the Deputy Director of the Global Assets Project for the New America Foundation. Thank you so much for coming. We hope to see you back here again soon.
Thank you, Ms. Sylvester. The Global Assets Project, which was launched as a joint venture in late 2006 between the Center for Social Development at the Washington University in St. Louis and the Asset Building Program of the New America Foundation, aims to advance and raise awareness of the policies, products, and initiatives that create opportunities for savings and asset accumulation around the world. Central to this goal is spotlighting innovations in the asset building and its related fields. We believe eBay's MicroPlace deserves such a spotlight because it essentially creates an opportunity for small retail investors in the United States, which potentially includes millions of socially minded middle-class Americans, perhaps some of eBay's many users, an opportunity to build their wealth while simultaneously contributing to the wealth and asset accumulation opportunities for individuals in the developing world. The Global Assets Project is very happy to host this event to highlight this new and compelling innovation and we are equally glad to see all of you here this afternoon, despite the late notice of the event and the not-so-stellar weather outside. Before we begin, I would like to mention that we are currently simulcasting this event internationally via the event's website at newamerica.net. And for those of you participating online, if you haven't noticed already, you will be able to submit questions to the moderator during the Q&A through the live chat option on the event webpage. I would also like to take a moment to quickly thank a few people and organizations that made this event possible this afternoon. First, the OPIC, the Overseas Private Investment Corporation, and the Calvert Group, in particular Wayne Silby, the founding chair of the Calvert Fund, for their financial support for this event. Beth Ann Roth of Calypso Organic Wine and Imports for donating all of the wine that you will all enjoy after this event. The Ronald Reagan Building and International Trade Center for their in-kind sponsorship of this beautiful space, as well as their great support of the International Trade Center while pulling together this event at the last minute. And finally, the Calvert Foundation, particularly Carrie McGarry and Shari Berenbach, for their gracious financial support, as well as their outstanding organizational support bringing this together. And finally, I'd like to thank our speakers, Tracy, Shari, Rob, Kate, and Ellen, for taking time out of what I know are their very busy schedules to join us all today to provide their expertise and insights on this issue. I'd now like to introduce you all to today's moderator and my colleague, Ellen Seidman. Ellen is the director of the Financial Services and Education Project at the New America Foundation, also within the Asset Building Program, and she's the executive vice president of National Policy and Partnership Development at Shorebank Corporation. Her full bio is in the bio handout that hopefully you picked up when you came in via registration downstairs. Ellen?
Thank you very much, Jamie, and a big thanks to everybody who has made this event possible. Microfinance has evolved over the past 30 years from the provision of very small loans for working capital, generally to very poor rural women in a group setting, to a much broader-based economic development approach that involves provision of a range of financial services to low-income clients, including the self-employed. Today, microfinance companies provide not only credit, but also savings opportunity, and frequently also insurance, payment services, and a host of business development services. Although microfinance has been traditionally funded by philanthropy and government, including multilateral support, in recent years, interest in the sector from socially motivated investors and the capital markets has exploded. And in 2006, this culminated, or it started, depending on your perspective, with the founder of modern microfinance, Muhammad Yunus, winning the Nobel Peace Prize. This sparked increasing interest by individuals and in well-off countries, including the United States, to ask how they can participate in this increasingly important and dynamic and effective field. So today we're going to hear about one of the responses to that interest, MicroPlace. We're going to understand not only what MicroPlace is, but also its unique position as a way for individuals to invest in, not just donate to, microfinance institutions, and not just the big ones that attract the capital markets investors. We'll discuss what the development means, how it came about, who's supporting it and why, and what its promises and pitfalls are. Our speakers today are, and their bios are in your handout, so I'm just going to name them and tell you where they're from, and you can read all about their really impressive careers later on, are Tracy Turner, who's the founder and general manager of MicroPlace, who's going to tell us what MicroPlace is and some of the thinking behind it. Shari Berenbach, who's the executive director of Calvert Foundation, which provides registered investment notes that enable MicroPlace participants to invest safely, and which is responsible for choosing and monitoring microfinance institutions that benefit from MicroPlace. Rob Mosbacher Jr., President and CEO of OPIC, which has provided support to Calvert, who will discuss how and why a U.S. government agency became a supporter of this project. And finally, Kate McKee, Senior Advisor to the Consultative Group to Assist the Poor, or CGAP, a consortium of public and private development agencies focused on microfinance and affiliated with the World Bank, who will put this all into perspective. As Jamie mentioned, after our panelists have spoken, we will have a lively question and answer session, including hopefully some questions and answers from our remote friends. And then we will adjourn to enjoy some of that lovely organic wine. So with that, Tracy?
Welcome, and thank you so much for coming on a rainy day with protesters out front and all kinds of other places you could be. It's wonderful to be here with you. And I too wanted to start off with a couple of thanks. The New America Foundation and all of their hard work in pulling this together. I'm completely impressed and honored to be here. And OPIC for helping to make tonight a reality. And then of course I have to always thank Wayne Sylvie and the Calvert Group for inspiring me personally to be here today. It's because of Wayne and the Calvert Group that I got interested in socially responsible investing way back as a student. And so really MicroPlace can be attributed to their generosity and teaching me about socially responsible investing. And Shari and the Calvert Foundation team, MicroPlace wouldn't be here without our partnership with them, and you'll hear from Shari tonight. But I have a huge debt of gratitude to her and her innovative thinking in making MicroPlace a reality. So let me start with a quiz. Always a good place to start, right? How many of you would say, yeah, I get this microfinance stuff, I get it, I understand how it works, I'm good? Okay, good. 10 years ago, there would have been no hands. Okay, how many of you are thinking, of course I don't know all about it, you ding dong, that's why I'm here tonight? Those are the two categories, so you've got to raise your hand for one or the other. Okay, so we're kind of half and half. So I will be brief about the background of microfinance, but the easiest way to convey what it's all about is with a quick story. I used to live in Nairobi. I worked for the World Bank and I did some NGO work, and I also did a semester as a student in Kenya, and so I have a little bit of experience with East Africa. And I lived with a family while I was there, which was a wonderful way to really understand the culture and the people and the microeconomic issues that you face when you're actually a part of the family. And so I was working at the World Bank on all this kind of macroeconomic theory and, you know, these big, huge loans to the Kenyan government and so forth, and thinking I was very important. When at home, the mother of the family that I lived with was a single mom with 3 kids. And this was, you know, ages ago before anybody really knew very much about microfinance, except for some Axion folks in Bolivia and Professor Yunus in Bangladesh. And so she took out a loan, my homestay mom, and bought 3 sewing machines and started a sewing business to make school uniforms for children. And with the profits, she repaid the loan, which wasn't called microfinance then, but that's what it was, and was also able to keep her kids in school and ultimately put her eldest son through college here in the United States. So take that story and multiply by 100 million people all around the world, in all different geographies, in all different cultural backgrounds, in all different religious contexts, and you have microfinance. It's really about the human dignity that comes from treating someone like an equal, treating them like a business partner on equal footing with you. And when I also worked for the Green Bank a number of years later, and I had, again, the opportunity to work with many, particularly women borrowers in Bangladesh. And when you look them in the eye and they look right back at you, which is very unusual in a Muslim country, particularly for women, to look right back at you and look you right in the eye and tell you how honored they feel to have the opportunity to access a loan, to lift themselves from poverty, and that they would much rather take out a loan than to be given a handout or some form of charity, because of the dignity that they feel and the ability that they have to take control of their own lives. So it really isn't about lofty microeconomic theories or about white papers that I wrote at the World Bank, which are gathering dust. It's really about human nature that makes microfinance so powerful. One of my favorite people is Assad Mahmoud from Deutsche Bank, who many of you may know. And he once said something really eloquent that I'll just steal from him, which is, when you give a person a handout, you steal a little piece of her dignity. When you give her a loan, you give her back a piece of her dignity. And that's really the power behind microfinance, and why I kind of set myself on a path to enabling all of us, everyday people like you and me, to be able to make the magic of microfinance a reality, not for just the 100 million people who have access to loans today, but the billion people who could benefit if they had access. So, quick history, which Ellen already shared with us, so I'll be brief. But in the 1970s and 80s, microfinance was really an experiment, right? There are a few experiments in various pockets around the world of small loans to the world's working poor. In the 90s, it really became widely accepted as an effective solution to global poverty. In this decade, not only is it considered an effective solution to poverty, but it's also considered a wise investment. So these microfinance organizations all around the world are not only helping people to lift themselves from poverty, but they're doing it in a profitable way. And that means it's sustainable. We used to think that profit and the poor, associating those two things was kind of like a dirty word. But we're really turning that paradigm on its head and saying, you know what, this really has to be profitable for this to be sustainable. If we're going to go from 100 million to 1 billion, we have to do it in a sustainable way. Think of it like recycling. Al Gore's made environmentalism so sexy. I gotta put it in terms that make it really sexy. And so I was thinking, okay, it's like recycling your bottles and cans, right? So we recycle our cans, we recycle our bottles, then we can use that material again, we can use it again and again, right? Think of your investment in the working poor in the same light, right? If you can invest and you get a return on your investment, you can reinvest that capital again and again and again. So, this is gonna date some of us, particularly me. Can anybody remember Bud Light's slogan from the 1980s? Yes, who said that? Nice work. Yes, good work. Tastes great, less filling. Ready? So you guys over here, taste great. You guys over here, less filling. Okay, ready? We're gonna practice. Tastes great, less filling. Tastes great, less filling. Okay, that's really pathetic. We need a little energy. Okay, so in our context, ends poverty, it's sustainable. Okay, ready? With me. Ends poverty, it's sustainable. Ends poverty, it's sustainable. Keeps going? Yeah, we'll work on that. All right, good, thank you. Just a little energy before we have a glass of wine. We'll try it again after we all have a glass of wine. Okay. So, I think that this is what gives me butterflies on my stomach, thinking about the fact that there have been a lot of approaches to poverty in the past, but few of them have actually been in such a manner that they are profitable and sustainable, and therefore there is no end to the potential to reach those billion people who need access to these loans to lift themselves from poverty. That's the magic, I think, of microfinance. So what's happening today? So in the last 5 or so years, something like that, we've seen a lot of high net worth individuals like Pierre Omidyar, who's the founder of eBay, or John Doerr, a venture capitalist, making significant personal investments, like $100 million investments in microfinance. We've seen Deutsche Bank, Morgan Stanley, JP Morgan, thankfully not Bear Stearns, involved in microfinance in big, huge ways, in ways that are very traditional capital markets investments in a new asset class. And that is revolutionary. To get that kind of capital flowing into this and to have them thinking about it like a new asset class and approaching it like not just your investment wallet having stocks and bonds, but now having a portion of your investment wallet invested in microfinance is really world-changing. So what about me? So I came back from Bangladesh and I thought, okay, I get it. I've seen it. It works. I want to invest. Where do I go? I don't have $100 million. I don't even have $100,000. There's no place for me to go to invest in microfinance. The closest thing out there was Shari's Calvert Foundation community note, which had a $1,000 minimum, and that was a great start, but not nearly enough. We could do a lot better. So I spent some time doing a little bit of homework on people like me, and I would venture to guess that most of you out there are not as wealthy as Pierre or John, so people like you maybe too. And it turns out that 97.63% of the US population makes less than $200,000 a year. So most of us, 97% of us, fall into the same category as me. Maybe we have $100, maybe we have $1,000, maybe we have $10,000 to invest, and we want to. We've done a bunch of homework at MicroPlace on the level of interest, and there's a heck of a lot of it out there to the tune of about $20 billion. If you really looked at the power of all of us in our investment wallets, it's over $1 trillion of investable assets that we could be investing in microfinance if given the opportunity. So we really need to be thinking about this, because of the ends poverty, it's sustainable approach. We need to be thinking about this, not with our charity wallets, but with our investment wallets. And when you think about using your investment wallet in a sustainable way, then there's an infinite amount of capital available to address poverty. So the idea of MicroPlace was born. Let me give you a little bit of, now you've seen this second page. Let me see if I can go back. So this is a snapshot of our homepage. I won't go through the website in gory detail, but I know all of you will run to it tonight and make investments. But let me give you a little bit of background on what the heck we are. So we're basically the first and the only website dedicated to everyday investors, like you and me, to invest in microfinance securities. We are structured as a brokerage, so much like Schwab or E-Trade or whoever your brokerage is where you manage your other investments. We are structured very similarly. And the investments that we offer are securities that are, real financial securities regulated by the SEC and so forth. So you're making an investment that is in a security that has a real prospectus and all of the kind of infrastructure behind real investing, and allows you to earn a return. And you know that the capital that you're investing is being used to fund microfinance around the world. So you can look up Kenya Women's Finance Trust in Kenya. You can look up Pro Mujer in Bolivia. You can pick whatever geography that strikes your fancy. Maybe you just got back from trekking in Machu Picchu in Peru, or whatever your motivations are, you can find an investment that resonates for you. And soon you'll be able to search the site for investments that are, for example, serving the poorest of the poor, or investments that have shorter maturities or longer maturities, or investments that are more focused on women. So you'll have various search criteria that allow you to find investments that are most interesting to you. So the other part I often get asked about, which I'll just touch on real quickly, is this eBay thing. And I started MicroPlace independent of eBay, but pretty darn quickly, when it was just kind of me and an idea, eBay just was already in love with the idea of microfinance and thought we need to find a way to use all of eBay's expertise in this world of microfinance. And upon hearing about this idea of empowering the everyday investor to participate in microfinance, this is effectively a marketplace, and that's what eBay is really good at. And so we're now a wholly owned subsidiary of eBay and supported by them for 100% of our activities. The other question that I often get asked is, we often get confused with person-to-person lending. There are a lot of person-to-person lending models out there, and they're wonderful, but they're very different from what we do. Cross-border person-to-person lending, which is what we would want to do, is very difficult to do unless you're a charity. And as I've said time and again, ends poverty, is sustainable. We're really focused on creating an investment service and getting people to think about microfinance with their investment wallets. And so that's why we approached building our service as a financial brokerage. So a quick challenge, I did the math real quickly while I was sitting up here. And if each of you were to go home tonight, log on to MicroPlace, make an investment, there are 1,000 people in the developing world who would be able to access loans and start lifting themselves from poverty because of us tonight. So hopefully we will see a spike in traffic on our site before midnight tonight. So just before I wrap up, I just want to introduce Harvey Grasti and Ashwini Narayanan, who are my partners at MicroPlace, and they're here tonight, and we'll enjoy sharing a glass of wine with you later. Thank you.
Thank you, Tracy, and thank you, our friends at the New America Foundation, and Ellen, and everyone for having us here. Calvert Foundation has had a great pleasure in working with Tracy at the launch of MicroPlace, and I might take a moment just to tell you a little bit about our history and how it is that we began working in this field. The Calvert Foundation is actually a nonprofit organization that was launched by the Calvert Mutual Fund Company, and many of us know Calvert because of their work with social responsible investment. Well, really dating back to 1990, the Calvert funds recognized that they could change certain levels of social impact through screening and shareholder action, but if they really wanted to address issues of poverty alleviation or economic justice, they needed to go beyond just shareholder action. And they asked for permission from their shareholders to invest 1% of the mutual fund assets directly into nonprofit organizations, into areas such as microfinance. And that experience went so well that they created the foundation as a separate nonprofit organization dedicated to popularizing this idea about using investment as a tool to end poverty. And the main way we've been doing this is through a security called the Community Investment Note, which has been out there selling since 1995. And those dollars raised have been going to microfinance overseas. They've been going to community development, affordable housing here in the United States. And while we were working to sell this financial product and really focusing on the notion that you can use investment as a tool to end poverty, we always dreamed that perhaps someday there would be a way for us to bring our product to the internet. The whole notion of being able to access the internet as a way to reach out to Americans all across the country, to make it possible for every person to hold a note like our own, seemed well beyond our means. And for that reason, I was very excited to meet Tracy really a couple of years ago as the MicroPlace idea was first being germinated, and my instant response was, how can we help? And that's being said because we recognize that for the kind of community investing, the kind of investing that we're doing in lending to microfinance groups and to lending to micro-entrepreneurs, it really takes all of us working together. Calvert Foundation, the issuer of a security, we need to work with brokers, we need to work through many different partners. And so it was really our honor and pleasure to work with Tracy to help develop these ideas and to put them into practice and into reality. And we can't begin to thank enough all the support that you've received from eBay and all the incredible talent and energy that the whole MicroPlace team has brought to this endeavor. So getting back again, Calvert Foundation, our role has been to be the issuer of a security. And so when we issue this note, it is sold to the individual investors, and then those dollars are lent to the microfinance institutions, many of which are listed here. But in order for us to serve this kind of financial intermediation role, we've needed a lot of support. We need to be able to assure investors that their investment dollars are safe, that they can count on it, and the way we do that is through a whole capital structure that has been enabled through many partners. In particular, OPIC has stepped up to become a very, very important partner in providing some subordinated financing that allows us to provide those assurances to our investors. And while OPIC is certainly our single largest supporter, and we want to thank them, so much here today. There really is a long list of foundations that have stepped up to enable this whole effort to get underground. MacArthur Foundation, the Doen Foundation from the Netherlands, the Omidyar Network, Rockefeller Foundation, the Michael and Susan Dell Foundation are all partners from philanthropy that have joined with us in this broad initiative to make it possible for all people across America to participate in investing in microfinance. I do want to also just mention that in order for us to do this work, we've worked with a number of important partners. And while we're sourcing the individual microfinance groups, there's an organization called MicroBest, and I believe there might be some participants. They've been a very active partner for us to help us identify transactions. OPIC Credit was another issuer on this side, has been also an important partner to us. And so it's really, rather than thinking of a market where there's competition, where one is competing against another, what we really see is a marketplace where everybody is joining hands to accomplish these very, very important goals of using capital to eradicate poverty. And then finally, I would be remiss if I do want to take a moment just to thank my staff. I've got a whole team, a number of team members here, because it's taken, this MicroPlace initiative has really touched upon every part of Calvert Foundation. So I want to acknowledge that there's been a lot of goodwill and hard work that's come together to allow this innovation to realize its goals. So thank you.
Well, it's an honor for me to be on this panel and to be able to share a little bit of our perspective from the Overseas Private Investment Corporation. I've been in this job for about 2.5 years, and the previous 25 years I spent in the private sector. So the reason I mention that is because I have a deep and abiding faith in the transformative power of private capital investment as a tool for economic and social development. And we get to witness that every day at OPIC. And this project is a great example of the kind of impact that we can have. What we try to do is tap the entrepreneurial capital in developing countries to use it as a force multiplier, if you will, and to help create jobs, transfer technologies, improve infrastructure, and just promote growth and development. And that's something that, again, this project will do. I need to give you what we call OPIC 101 because we are occasionally confused with that organization that has a slightly different letter that causes heartburn at the gas pump. We are not OPEC, even though people come up to me often and say, what are you going to do about the price of gas? And nothing, sorry. But OPIC was created about 37 years ago to help mobilize and facilitate U.S. private capital investment in developing and emerging market countries. And we were created not just to help facilitate investment and to mitigate risk, but we were also created as a development agency. We are very keen on the developmental impact of the projects we support. We have essentially 3 products or tools. One is political risk insurance, which we sell to the buyer, and it protects you against expropriation, currency inconvertibility, and political violence. A second product, and the one that we're using in this instance, are loans and loan guarantees. Third product are private equity funds, where we identify a region or perhaps a sector of the economy in which we want to encourage investment. OPIC puts in between 1/3 and 1/2 of the fund, or sometimes 1/4, in the form of senior secured debt. A fund manager, U.S., is picked through a competitive process and then is responsible for raising the balance of the fund and making the investments. So those are our 3 products. But to get back to the development mission, if you will, if you take seriously economic development and you take seriously how we're going to improve that, or at least leverage our resources best, you would be hard-pressed to find any better way that you can help create, from a catalytic standpoint, true economic growth that is sustainable, better than creating access to credit. And as most of you know, credit is not available in most of the world for most people. Even good, solid, small and medium-sized businesses can't borrow money on terms they can afford. And so not only are we focused on microcredit, but we're also focused on small and medium-sized business, because that's where the jobs will be created. And that's something that we take very seriously. Now let me touch on sort of our, we call it our MSME, micro and small and medium-sized enterprise strategy at OPIC, and what we try to do with a project like this. We try to select financial intermediaries and transactions that best can leverage OPIC's resources. We support transactions that have a significant demonstration effect in the marketplace, and will utilize innovative investment vehicles to link investors to the microfinance institutions or to the SME sectors. We support local currency financing options to mitigate cross-border currency risk, something that is a matter, seems like high-powered financial engineering, but is a matter that is pretty important in these markets. We support creation of microfinance institutions and SME-focused investment funds that are able to tap or provide access to capital markets. We tailor financing for micro-housing by offering appropriate terms, meaning 15 or 20-year fixed-rate mortgages in a lot of markets. We're doing over $1 billion of low and moderate income housing financing around the world, and that's $1 billion of OPIC. That's leveraging $7 to $8 billion of private capital. And if we did nothing else from what we have already committed to do, we will be responsible for helping finance 450,000 units of housing, much of it in sub-Saharan Africa, $400 million in sub-Saharan Africa, much of it about to be in the Middle East, where they desperately need hope. So we focus on early stage microfinance institutions that have strong growth potential but limited access to capital. And last but not least, we try to increase SME financing by providing funding facilities and risk sharing to commercial banks that want to go down market or to MFIs that want to go up market. So that's kind of our strategy. In total, OPIC has provided a little over $330 million to credit facilities that finance 84 microfinance institutions in 38 countries. And we estimate that through these supported projects, we'll enable somewhere between 1.2 and 1.8 million microloans over their project life. And we've had the pleasure of being involved in a number of innovative projects. I would say this is one, but before this, we were able to play a major role in helping finance Blue Orchard Finance, one of the first microfinance investment vehicles. And we helped Blue Orchard to raise over $80 million to make loans to 14 MFIs in 7 countries. And I'm proud to say, and it was mentioned earlier, I think Tracy maybe mentioned it, Morgan Stanley, but we had that had a significant demonstration effect, and it enabled us to work with Morgan Stanley through Blue Orchard to close on a microfinance collateralized loan obligation, which was the first ever rated microfinance transaction in international capital markets. So another transaction I want to mention quickly, Citibank. Citibank, as sort of the largest U.S. bank with global retail presence, is a partner we have in a lot of the world. One of our many framework agreements with Citibank is a $100 million microfinance facility in which OPIC has a significant portion of the risk. Now, with respect to this deal, OPIC's $10 million guarantee facility will help provide the capital support to the Calvert Foundation, as Sherry mentioned, which will enable the foundation to scale up and hopefully sell $143 million of Calvert Community Investment Notes on MicroPlace. And the proceeds of the notes sold on MicroPlace will be used to fund loans to MFIs around the world. So you've heard that. We like this not only because it's innovative, but again, it has a strong demonstration effect in the marketplace by putting microfinance institutions within the grasp of retail U.S. investors through the use of the internet. And that to us is the most exciting kind of transaction that OPIC can be part of. And it also shows how $10 million can be leveraged considerably, just as I mentioned the $1 billion of housing investment that we've done that's been leveraged to $8 billion. So this is an exciting time. Rarely, if ever, have I seen a time when private capital can do so much good in the public sector. In other words, private capital doing public good, and those things are sort of converging. And I think it's a time when the creativity that you see in MicroPlace and in Calvert Foundation has unlimited potential to address issues of poverty that have seemed so intractable for so long. But we're proud to be part of this venture, and we look forward to your questions. Thank you very much.
Thanks very much. It's an honor to have the chance to put this a bit in perspective in the microfinance field, and I'm not going to do that in a very analytic way. Instead, I have written on my hand 3 kudos and 3 worries I have about the MicroPlace model. And all my friends in the audience are saying, hey, you have your to-do list written on your hand. It's always written on your hand. But imagine for a moment that it's a column and it has 3 kudos and 3 worries. So first, and this is maybe an obvious one to MicroPlace, you've come up with an innovative and exciting way to offer brand new options. And that's not the important part. It's for a brand new class of retail social investors, not the high rollers, but the teachers, the students, the computer programmers, the medical technicians, the not so well paid research assistants at think tanks and so on who might be in the room. You guys, there's a thirst out there to make a difference and to put your money to work for your values. And MicroPlace, I think, is at the leading edge of billions and billions of dollars potentially in socially responsible investment that is beginning to flow into emerging markets as well as this country. So MicroPlace, I think, can play a major role in growing this next generation of investors. And as I think some of the statistics that have been offered by the panel so far suggest, there's a huge gap that needs to be filled in terms of demand for financial services. And I see a particular role for an entity like MicroPlace to be linking up this brand new class of investors with the newer set of microfinance institutions. The next generation that's not so big, not so famous, not so jet-setting, but is finding markets to fill and doesn't have as easy access to the big public and private investors out in the market. So kudos on this excellent concept. Tracy, you said there are probably a billion people needing service, and we would agree with that. This is a part of doing that. My second kudo is that MicroPlace has taken considerable effort in working with its other partners here on the panel to do it right. The securities registration, taking care to disclose, bending way over backwards to not mislead potential investors about what they're getting. It's quite important that it be done right because this will have a demonstration effect in the market, and it's important that the early pioneers take some care. My third kudo concerns your efforts to make the bigger connection and to educate your investors. When I was going and browsing around on the website, one of the things I liked was that little pull-down tab on Learn More. And what I liked is it talked about poverty, and it talked about where microfinance came from. But it even was making an effort to illustrate that poverty has different dimensions and microfinance can play different roles in different countries and for different kinds of people. And I think this is really important to get your investors thinking about the overall issue of poverty, but then putting it in the context of Tanzania or Bolivia or Cambodia. So, 3 kudos. Cool concept, carefully executed, with bigger ambitions. Okay, now you've all been waiting for the worries, right? Because that's the juicy part that you'll get to ask your questions about. So I have one on what I'm calling the demand side, which is the microfinance institutions in your securities, and 2 on the supply side, which I think of as your investors. So let me start on the demand side, the microfinance institutions. They're the foundation on which MicroPlace is built. So what are some of my worries? And I just chose a few kind of broad ones. The first is the question, will they deliver a high quality of results on both the financial and the social bottom lines that your investors are expecting? How will they handle the inevitable crises? You mentioned that you spent time in Kenya. I'm sure it's heartbreaking to you to see what happens, and these things happen, and perfectly good MFIs get hit with perfectly dreadful circumstances. Natural disasters like the tsunami. Are they strong? Are they going to be able to weather these storms? Might some of them do bad things and pose a reputation risk for MicroPlace, as well as a credit risk? I mean, microcredit is not an unalloyed good. It can cause some harm as well if it's not carefully done. So This requires that you pick well. You're going to need to do careful screening and due diligence. But it also requires that you be more than a passive investor, that you make sure that your MFI partners are staying ambitious, but laying out achievable strategies and managing their risks well. And it's not easy to do that from a distance, and it's expensive to do it well, as Shari knows from having worked in this space for quite a while. So reconciling that with your business model, I think, is going to be a challenge, but really important. Those partners need to do you proud because there's a lot riding on it. So that's my first worry. My second worry is on the supply side, or the investors, the retail investors. The first is maybe a kind of a quibble, if you will, about the whole client interface and its user-friendliness and striking the right balance in this client interface. You know, I'm going to go online. I need to understand what a security is. Gee, I thought I was just going to give some money and get it back. And then I read step 1. I'm sure this language was selected to be accurate and as user-friendly as possible. You purchase an investment on MicroPlace that provides the opportunity to earn a financial return. Huh? It's challenging. You guys have a lot harder communication challenge because you're not asking people to make donations, so it can't be as warm and fuzzy. It's got to be accurate, and the SEC has some rather strong views about how it has to be done. But I think really to experiment, to get a lot of user feedback on how to make that user interface as effective as possible. Another little quibble, I have to choose an MFI. So now I'm thinking about my confidence level. If I'm choosing an entrepreneur, I read the profile, I think, oh, that sounds, I like that idea. Or, boy, she seems like someone of real character. Or, gosh, what a hard life she's had. Okay, now you're asking me to choose an institution. I don't know. How am I supposed to know what's a good MFI? Isn't that your job? Maybe I just know I want to do something in Africa. Or maybe I just like the whole MicroPlace concept, and can I, just invest in the whole pool? And then there are these different issuers. What does that mean? So I'm just being, really just putting a couple of things out there, and I know, and I feel safe to put them out there because I know you're already working on them from conversations I've had with you. But I think this is a really crucial issue. And it relates to my third and final worry, which is... No, there were two subheadings under the user friendliness. But I am almost done with my worries, Tracy. The third is, how are you going to continue to... How are you going to make this work as a social networking enterprise? And I see kind of two dimensions of it. One is the viral marketing side, and the other is bringing people up the knowledge curve. So I think you need to continue to educate your investors, broaden their awareness, their understanding, their appetite for this particular investment vehicle, but also for kindred options that are relevant to poverty. You'll have a lot more leverage in that different sense if you're making them aware and making them understand more. And here it's going to be a hard balancing act because there are a lot of really simple and appealing messages about microfinance, and the problem is they're not correct. So microfinance doesn't end poverty by itself. How could it? Think about it. We're talking about debt, and if we're lucky, maybe savings, maybe some insurance. It's not going to end poverty. As people come in, you need to be giving them more complicated messages. And it certainly is really hard to make it work for the poorest of the poor. So that's part of the burden of what you're going to need to be educating to. So I'm asking you to, I guess, kind of take on for all of us this communication challenge about what this can and can't do, and broadening the understanding of your clients, because you're reaching investors that other people aren't, and it's just a huge opportunity to do that. I was also thinking about what it's going to take to compete in the social networking space, which is changing at lightning speed. I'm almost done here. Yesterday, as I was on my way driving one of my teenagers from yet another sports practice to yet another music lesson, and I was in our old car, which is very old, and only the AM radio works. So NPR was not an option, so I'm listening to this, blah, 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 and an ad comes on, and it's from SunTrust. So if you switch your account to SunTrust, instead of a toaster, you get $100 donated to the charity of your choice. And they had a very appealing guy talking about how, gee, all I did was I switched my account and $100 went to my brother-in-law's Little League team. And gosh, my family members and friends thought this was so great that they switched their accounts too. And $100 may not seem like much, but it adds up. And I went, light bulb, MicroPlace, social networking, this is what we need, is the friends and family effect. And so I hope that you can make yourself into a real recognized name brand in the social networking space and get this viral marketing working for you. So I have just two final thoughts about how you can stand out, in addition to picking your partners well and working on that user interface. The first is to take your care and professionalism and make that clear to users and a real advantage in the marketplace while you're meeting people where they are in terms of their level of understanding. And the second is to make sure that your values and processes are out there in the market in a transparent and compelling way. I think you have a real opportunity to set the bar high on what you expect of yourselves and your investees. And by setting high standards of social performance, consumer protection, and ethics, and being really exemplary, I think this would be a way to distinguish yourself and to exert some leadership and stay ahead in this hyper-competitive space. Others are certainly coming along. Yes, sincerity is, imitation is the sincerest form of flattery, but wouldn't you rather have a little less imitation, I'm sure. But we need to leverage this opportunity by, as people come in on the ladder, helping them move up that ladder to have a bigger understanding and to be willing to do more value-driven things with their money. It's a lot of burden to put on a pioneer that's just a few months old, but I'm sure you'll do it.
I want to thank all the panelists. I think, given the questions that Kate raised, one of which I was actually going to start off with if nobody had a question, that I'd like to give Tracy, 2 or 3 minutes to respond, and Shari, if you also would like to respond on the issue of how do you pick them.
Sure. Thanks, Kate. Didn't know I brought all my dirty laundry with me today. No, I agree with everything that you just said. You're completely right on all fronts. All of the challenges she just laid out are exactly the things that we are tackling next. We're a couple months old, and because we are the first web-based brokerage, which is weird, focused on microfinance, which is weird, in this kind of socially responsible investing world, which is weird. The SEC and the NASD, or it's now called FINRA, kind of looked at us like the freak show at the circus, and so it was a tough, long road just to get to our launch stage. And so what we focused on in the past year was basically building all the boring back office stuff, which Ashwini and Harvey can tell you all about if you're interested, but none of the stuff that you see on the site, and all the regulatory infrastructure, which is a really big deal. And it took up basically all of our time and energy in getting to this point. This year is all about focusing on the user experience. So I'll show you some of the screenshots here. This is our homepage. If you click through to Tanzania, you get a little bit of background about poverty in Tanzania, and then an investment opportunity offered by the Calvert Community Investment Note in Tanzania with some details about the investment and some borrowers. If you click on that, you get this really ugly page with a whole lot of text that's all legalese, and Kate read some of it to us already. And that's because just to get to launch, we needed to be really conservative in using, really specific language to make sure that we were compliant. Now that we're launched, we can go back and completely revisit the entire user experience. And so we're doing a whole bunch of things to make it much more engaging and user-friendly and fun for investors, but also still compliant. Right now we have a relationship with the SEC, so we can work with them on making sure that it's all still completely to the highest standard that Kate holds us to, which everyone should, but is also engaging and easy to make an investment. Particularly, I want to focus in on one of the things that you mentioned that I think is really important is, okay, so you got a bunch of microfinance institutions out there. How the heck do I choose? Like beyond geography, I don't know how to pick amongst all of these. So what we're building now that you don't see yet, but we'll show you some kind of little mock-ups. Like this is a mock-up that you wouldn't actually see on the site yet. But you'll be able to search on different criteria, and it's our responsibility to make sure that the criteria we list out there is meaningful. Like for example, if you go to REI and you search on skis, right, and you get a whole bunch of skis, pictures of skis, how do you choose? Well, they give you a little compare capability, right? So you can compare all these different pairs of skis across all these dimensions. Well, I don't know anything about skis, but it turns out that a really important criteria is the flexibility of the skis. What did I know? But it lists that as one of the very top criteria in picking my skis, and then I can see across the different investment opportunities how the skis compare. Maybe I like stiff skis, and Shari likes more flexible skis, right? So it's not a value, there's no judgment on which skis are best, it's just giving me the information to very easily digest which investment, or which pair of skis are best for me. So take that same idea and apply that to investing in microfinance. Oh, I guess I don't have, well, so you can see these are mock-ups, they aren't the site yet, but things like, this particular investment focuses on the poorest of the poor, it focuses on women, it operates in rural areas, and we're giving the investor the opportunity to select on criteria that makes this investment opportunity more than just an MFI, but it gives you criteria to choose which is best for your particular interest. So we have investors that say, okay, I get microfinance, great, all these organizations, great, just show me which one is going to maximize my return. I want to make 7%, so show me where to go, right? Others are going to say, I don't care about the return. Great that I can earn a return on my investment, but I really care about the geographic areas where the poverty is the worst. Point me to those investments, right? And we need to give the investor the opportunity to search that way. So the user interface, absolutely. You'll see in the coming 2 months or so that it'll be completely reinvented. And that will enable you to choose the MFI more easily. Then your first point was about how do we assess which MFIs or funds are worthy of being on the platform? And this is a very important question, and I think a fun one to think about in the long term. So long term, my vision has always been that MicroPlace could become a transparent marketplace. So think about eBay, right? Before eBay existed, there was no really efficient way to figure out the value of your old cell phone. We probably didn't have cell phones back then. Your grandfather clock or whatever, or your 1990 Honda Civic or whatever. Now, eBay has created an extremely efficient, transparent marketplace where if you want to buy a Honda Civic, you can go to eBay, find a Honda Civic, and not only do you see details about it, but you see close-up photographs of the dent on the side of the Honda Civic, right? That's the most transparent you can get in terms of a marketplace. So now think about that in terms of the marketplace we're building. If we create a free market here where investors are going to go where the investment opportunity is most transparent, right, then the microfinance institutions are going to be held to a higher standard to be transparent with their information. And that means we're going to have a more efficient marketplace, a more efficient capital flow. So that's pie in the sky stuff, especially given we're a couple months old here and, kind of still in diapers. But it's exciting to think about the potential, and it's, to your point, very important that we get to that point in a very thoughtful way, that the information that we display about the MFIs are digestible by the investor, and we hold the MFIs to that standard. In the short term, we have very strict due diligence processes, as the Calvert team can attest to, given they all went through some pretty strict, weeks of due diligence on our part, evaluating them, and we do the same with every investment opportunity before we allow it to be listed on the platform. And that's not because we want to reduce the riskiness of the investment opportunities, but we want to make sure that whatever is listed has clarity of what those risks are, has the infrastructure, the management team, and the operations and so forth behind their operations, so that you can feel confident as an investor, that you know what you're buying. That's our responsibility as a broker-dealer. And furthermore, further responsibility as a broker-dealer is suitability. So if a grandma from Des Moines wants to make an investment on MicroPlace and she has $5,000 of savings and she wants to make a $50,000 investment, it's our responsibility to make sure that she doesn't make that investment. Or if there's an investment opportunity that's particularly risky and she wants to make that investment, we are responsible for making sure that the investor and the investment are suitable. So it's a real serious responsibility that we take on, not only because I think it's the right thing to do, legally we have to. So.
Thanks very much, Tracy. Shari, would you like to take it down the next level and talk a little bit about how the microfinance institutions are chosen and monitored?
Yeah, and I'll, the whole role of the issuer on the MicroPlace platform is really to be that intermediary that is receiving the investor's capital, that is actually placing it out into the field, and at the end of the day, the issuer is responsible to repay the investor. So that's just a real important point to get across. We can make that kind of commitment because of the level of due diligence and oversight that we do for the microfinance groups in the field. And you're absolutely, Kate, you're absolutely correct that it's very difficult to do that from afar. And as a result, because we are really operating a global endeavor, we have entered into service contracts with other firms that have been in the business for many years, with many years of experience, and are a lot of local contacts and a lot of local presence, to actually helping us to identify the microfinance groups, to doing field site visits and field supervision. So that while you have our office and infrastructure, there's actually a whole global infrastructure that we have put in place that really relies on other partners and all of us working together. And one of the things that was very exciting in the launch of this effort was really to create a whole new set of guidelines and risk ranking methodologies and underwriting procedures and protocols, special investment committees that are all standing behind to uphold the integrity of this process.
Great, thanks a lot. Okay, got some questions from the floor? Sir, let me just, wait a minute, we're going to have rules of the road here. We have microphones, which is really important because we are webcasting this, and just raise your hand. One of the wonderful New America interns who are paid marginally better than Kate thinks will bring one over. Here we go, right here. And state your name and your affiliation, if you would.
My name is Andy Constanzas. I'm an independent consultant. And from what I heard, I know a little bit about microfinancing. I got involved because I have an Indian customer who wants to get involved into microfinancing. I don't understand why MicroPlace is affiliated with eBay and is not a mutual fund under Fidelity or a branch of Citigroup or somebody else. I mean, there is insurance, there is expected rate of return, there is specific markets. I think the most discouraging part of what I heard is the selection. And I mean, it's more complex than trying to invest in the stock market and trying to find out where to put your money. So that would have taken out quite a bit of that complexity if a mutual fund with specific rates of return, and I searched and found out that all these banks and all these financial institutions that are involved in it know exactly what to expect in what market and in under what conditions. And it would have made it much easier, and I think that you would have collected a lot more investments that way.
Okay, let me see if I can, I think there are two questions in here. I think one question is, in essence, why aren't the more traditional financial institutions, including the mutual fund industry, providing this sort of opportunity? And then I think a second question is, what makes, it's a sort of similar twist on it, what makes the kind of opportunity that you are providing on MicroPlace different than what is being provided by the larger, more traditional financial institutions? Shari, you want to take the mutual fund question first, since there are Calvert mutual funds?
Yeah, and I want to be very careful here in that I'm the executive director of a nonprofit organization, and so I'm not really here to give formal legal comments about the securities industry. However, from what I understand, is that a mutual fund, by definition, needs to be comprised primarily of publicly traded stocks and bonds, and the investments that are being placed into the nonprofits, are into the microfinance groups, are not publicly traded. So these are direct loans, which would be very difficult to execute in the legal parameters of a mutual fund construct. But once again, I want to be very cautious because I am not a lawyer, I'm not an attorney, I'm not here to provide guidance about SEC guidelines. That being said, there are certain advantages to, and in fact, the community investment note product itself, while an investor is able to target specific MFIs, the note product itself does provide an investor access to a pool of loans and functions with some of the diversification that you might typically want to see in a mutual fund kind of framework, but we are clearly not a fund itself.
Kate, do you want to, go ahead.
You know, there are a growing number of commercial banks that are getting in the microfinance area, and they're getting it because they've decided it's profitable, not because necessarily it's charitable. That creates a new set of opportunities. You can assume that those who are profit-driven are going to take the best credits they can find. And so it's incumbent upon those of us that are helping create new products to dig deeper and look at second and third and fourth tier microfinance institutions that are going to make more challenging loans. And that's the way we get the greatest penetration. So I think there's plenty of room in this space for a whole lot of players. And that's what this new venture represents. But you can pick from a variety of options. And we're aligned with several of them. But our guidance to anybody that's going to team up with OPIC is we want to see the developmental impact of what you're doing, and we want to see it go down as deep as possible in terms of the challenge of the micro lending you're doing.
Terrific. Okay, thank you very much. Jamie, are you getting questions?
Yes, I am.
Sure, we'll take one these are the cyber questions.
Yeah, these are all coming from those watching the webcast and via the live chat, and there are a lot of really great questions. So if you don't mind if I stay seated so I can read from my laptop. One really interesting one that just came in is from Foncoze USA. And they have a technical question about how the MFIs work with Calvert to get up onto the MicroPlace site. This is from Brad Latham. So the MFI would have to work directly with Calvert first to issue the note, then could apply to MicroPlace to offer it for sale on their site. I think there's some...
Yeah. We have a very active process of identifying organizations that are good candidates for the to be issued, to be posted on MicroPlace through the Calvert Foundation note. And that pipeline is really sourced through the local partners that I was mentioning, the local technical partners that have the field presence. They are recommending organizations. We, through our own work, are recommending organizations. And probably most significantly, we are looking primarily at some of the smaller organizations with assets below 15 million, but we're also looking for some fairly stringent credit quality standards. And so when we're identifying groups to be involved with, they really have a very high hurdle, very high bar in terms of the confidence that we can have in that organization in lending to them. We certainly have heard of Foncoze, and we'll certainly be glad to reach out to them and begin to consider whether they would be a good candidate here.
Super. Okay, question in the back. Turn around, Beth.
Rob Colorina, Asian American Chamber. Question.
Is this directed to anyone in particular?
I think it might be towards Rob, but I'd be interested to get the MicroPlace comment as well. The adoption in foreign countries, I guess that was one of the aspects of bringing in OPIC as a partner, but I think from a prospective basis to actually how it gets done, it's going to take a lot of work. I mean, there's a lot of cultural issues here that you're dealing with generations. I was just curious as to how you intend to properly adopt and this becoming sort of, in some ways, it competes with some of the local financial institution options there. And in many cases, those institutions are government related or they're conglomerate related. But I would appreciate some input on that.
Well, that's really more of
Yeah, I think
question about microfinance, correct?
Yeah, and then Kate may well be the right person.
Well, I think the question, at its essence, you're asking, where might this fit in the overall local capital market and the capital structure of the MFIs? And I think probably the two main points to make or pictures to have in your mind is there's lots of demand, and these tend to be quite fast-growing institutions. So it would almost be impossible, I think, for an institution to get too dependent on MicroPlace or to have to worry about displacement of local capital. But that said, it is a very important concern that we share at CGAP. We think that ultimately most of the capital to finance the growth of these institutions should be domestic. It should be deposits. We want local people to have confidence in the institution to deposit their money there, and that's an extremely valuable service, or loans from local banks. And so I think it's another aspect of what several panelists have called the demonstration effect, that part of the hurdle is getting these institutions to grow to a point for them to get a track record where they're better able to compete in their own market from a more diversified set of funds. And I don't know, someone on the panel might want to comment about whether there are limits as to what percent of an institution's balance sheet you're willing to be, but that's another way to ensure that there's diversification.
Just add one more comment. Going into the commercial banking arena in many of these countries and recognizing that many are very well capitalized, but they're not making loans. And there are a variety of reasons for that, but the first one is they claim too much risk involved in making loans to small and medium-sized businesses, much less micro. Second, they have no capability generally in terms of their personnel or their technology platforms to do this in an efficient way. And so when we talk about creating support for an SME lending facility, we're talking about sharing portfolio risk with the bank on the loans on agreed upon criteria. We're also talking about trying to help find them technical assistance so that they can both train people and create the technology platforms to do that. And finally, the borrowers need help. I mean, microfinance borrowers are one set of folks who, the microfinance institutions deal with and are comfortable dealing with. But, you talk to bankers about, okay, small business loans, and, the idea of a business plan is a completely foreign idea to many of these folks. So it's going to take a lot of help. But I think with the combination of these things, commercial banks will find that SME lending is in fact profitable, not nearly as risky. It's the same kind of counterintuitive stuff that we got through in the microfinance arena, where people were worried about what the default rate would be, and then were surprised at how low it was.
Next question? Yes.
Bren Rosenthal, I'm from the Green Foundation. I think my question is for Shari and for Tracy. I was just wondering, what is the cost of funds for the MFI to access funding through MicroPlace? And are there any other additional costs in terms of reporting our client profiles and what those may be?
That's a great question. So from MicroPlace's perspective, we simply want to be an agnostic platform, right? We just want to be a marketplace. And a microfinance organization that lists an investment opportunity on our platform can list whatever interest rate they want. Now, obviously, we do our due diligence and so forth, so they're all kind of rational products that we allow on the platform. But from our perspective, we basically want to be agnostic. So we can encourage the microfinance organizations that are offering investments to, hey, we've seen more interest in these kinds of investment than those, and that kind of advice. But we basically remain agnostic. But we do charge nothing to the investor. The service is free to the investor, and we charge a 1% fee to the issuers or the sellers of the investments on our platform. But Shari can probably give you some insights in terms of the actual MFI cost of capital.
And of course, the cost of capital per each MFI will depend upon who the issuer is, and it also depends a lot on the local markets. On average, the MFIs are paying around 8%, the MFIs that are accessed through our portal. And in fact, we find that the investors are earning about 3%. And so where is that missing, in between spot there? Some of it is going to the MicroPlace fees, some of it is going to the field supervision. Others are related to the cost of managing, doing the listing and all the filings with the states in order. And then it's also going into funding loan loss reserves and helping to make this a safe investment. One of the things that I think is a really important consideration is that and once again, I want to be careful because I'm not a lawyer, but what we find is that there's certain kinds of investments that really are geared or oriented towards what are referred to as accredited investors or qualified investors. And those larger investors really are free to take on all different kinds of risks that they might wish to do. And so the wealthier investors or institutions have a very robust marketplace of different microfinance securities from the commercial banks, but they really have the option to deal with certain scale of transactions in ways that make it a very different marketplace. What Calvert Foundation has been really dedicated to doing is creating a financial instrument that's really available to average people. And in order for it to be available to average people, we've worked doubly hard to put in layers of credit protection and on-site supervision and many, many different elements, because we'd really like all kinds of investors to be able to come, which means that we really have had to work very, very hard to make this as safe an investment option as we possibly can.
Rob and Kate, do you want to comment on this issue about differential interest rates through various channels and to various different kinds of microfinance institutions, which I think is at the heart of this question?
Well, we're sort of 2 or 3 steps removed. So we're helping work, for instance, in this case, with the Calvert Foundation and MicroPlace, and we, as part of our approving our relationship, want to make sure we understand what practical interest rates are going to be and all the due diligence they do. And these people have a great track record, so we're comfortable accepting what they do. In terms of just in general, for cost of capital or funds for OPIC, when we do a loan guarantee or we're doing a financing of some kind, we're basing our cost of capital on federal funds rate for the term, plus some premium that reflects the risk. And the premium is generally 100 and 200 basis points, maybe sometimes higher in some really tough places, sometimes lower in some places.
Jamie, you have another one.
Hello. 2 short questions from 2 different interested investors. The first is from Shannon Mudd, a professor at Ursinus College and an advisor to a student group interested in making an investment. Because this is an investment, I suppose a tax ID is necessary to participate. I am thinking about a group which wants to put money in jointly, for example, an adult class from a church, synagogue, or mosque, or a student org from a college. I fear the need for a tax ID will be a problem. Any suggestions? And the second, are there any credit enhancements behind these investments on MicroPlace, or as an investor, do we need to understand the risk differentiation between the the issues listed on the site?
Yeah, good questions. So the first one about a group investing is a wonderful idea. There are lots of wonderful groups out there would love to enable to invest. We can't yet. Right now you have to have a unique social security number. So there would need to be one individual who would be willing to be the investor. And you might share the excitement of the investment, but there's no way to do a group investment yet. We're working on that. That's why we pay Ashwini the big bucks. The second question was about credit enhancements. So as part of our due diligence process, that's one of the things we look at very closely so that we understand the level of risk that an investor is exposed to and the types of credit enhancements that are put in place. The best thing for an investor to do is to look at the prospectus. And the prospectus is a very long legal document, but it's basically the contract between you and the security you're buying and tells you exactly what it is that you're getting. And there's a risk section in each prospectus that details the riskiness that is important to understand. And it should also, in the prospectus, explain any credit enhancements that are available to the investor so you understand the level of risk associated with it. And Shari might want to elaborate on what they do specifically.
Yeah, and I love hearing this question because in many ways we're here to celebrate the partnership between Calvert Foundation and one of our sources of credit enhancement. Calvert Foundation has, I believe, 21 listings up on the MicroPlace site at this time, and all of those issues have the exact same credit risk. They have the credit risk of Calvert Foundation. And we have worked very hard to bring many credit enhancements, and in fact about 16 million in credit enhancements to support the investments in MicroPlace. And so, and our OPIC has been a very important partner in this total process. So I do think that I want to endorse what Tracy has been emphasizing, the importance of looking at the prospectus, and that the prospectus should be defining and disclosing those kinds of credit supports. But because this is a product that's designed for retail investors, it was very important to us to be able to offer an investment product where the risk is managed and where there is not really a variation of risk across any of the particular investments made available through Calvert Foundation.
Okay, 2 more questions. This gentleman here, and then...
I'm Dennis Grubb with the Ares Group, a development finance consulting firm. Now, I have no problem buying a Calvert note, okay? And so you've got 21 investments on MicroPlace. But my concern is the credit risk for other issuers. Are we talking about microfinance institutions in 70, 80 countries being issuers? And then we have the credit risk of that particular institution? Because if that's the case, then the due diligence required is extreme. And your site will be overloaded with financial information in order to make a judgment about the credit risk of an MFI in Mongolia or someplace.
Exactly. It's a really good question. So think about when you buy a bond, say a corporate bond or U.S. Treasury or whatever, there's a rating, right? Fitch, Moody's, S&P, whatever. AAA if it's a U.S. Treasury, AA if you're, well, I don't know what corporations are there yet anymore. Not so many anymore. But you have a very easy metric that's widely accepted as an easy way to evaluate what the level of risk associated with your bonds, right? With mutual funds, there's Morningstar ratings, right? There's this star system. It's really easy for any one of us to go and quickly and easily know from a third-party source the quality of that particular kind of investment opportunity. And our industry needs the same thing. We need the same kind of third-party metrics that make it very quick and easy for us to evaluate different investment opportunities. And so that's part of we're just the platform, right? But it's our job to go out and find those kinds of third-party ratings, star systems or letter systems, whatever they are, that are appropriate for our asset class.
Tracy, let me just try this question again. How many issuers are there on MicroPlace as opposed to MFIs which ultimately benefit from the investments?
Well, the long-term vision is is exactly what this gentleman asked, right? That there might be 70 issuers from all across the world selling investment opportunities on MicroPlace. So I kind of answered for the long-term vision. Today, there's OPIC Credit and Calvert Foundation that have multiple different investment opportunities listed today. In the coming year, you'll see a number of other issuers being added to the platform.
So that right now, the issue is really what the due diligence is on the issuer. At some point, there's this broader vision where I hope the scoring system works better than the ratings on CDOs.
Yes.
Okay, one last question.
I'm Jim Bellis with USAID. This question is for Tracy. I'm interested in the information technology aspect of this, and I didn't get a clear picture of what eBay is doing other than financial support, but are you utilizing their information technology in your delivery system?
We haven't really talked much about eBay, but I, as a social entrepreneur, I couldn't be more lucky, proud, honored to have a company like eBay supporting an idea like this. Their information technology expertise are world-class, right? I mean, best in class. So we do benefit from accessing eBay resources in a number of ways. Our technology team comes from eBay and PayPal, the majority of them, and they're full-time on MicroPlace, but they previously came from eBay technology teams, and we benefit from reaching out to the eBay technology expertise to the extent that we need their help. There are about 200 or so eBay employees who have helped us at various times along the way from our from the beginning of creating the idea to where we are today, and hundreds more that would help if we could engage them in different ways, from HR systems to accounting to IT to and everything in between. So it's been a real wonderful experience, and one that was a little nerve-wracking for me, handing over the kind of beginnings of my baby to this big company that you immediately lose control. And the fact that they've let us just run with the strategic direction and then just been there to support us financially and with their expertise and resources it's been great.
Terrific, thank you. I think that's it. The panelists will still be here for you to ask them questions privately. And you can actually gather people around so it could be a little more public if you'd like. I want to thank all the panelists, the Reagan Building for the wonderful reception that we've had here so far, and the more literal wonderful reception we're about to have. All of the New America Foundation staff who've just been terrific and really pitched in their usual way, but it's great to have you working on all of this. Jamie Zimmerman, without whom this absolutely would never have come together. And finally, I really want to thank the audience, both here in Washington and around the world. Thank you so much for participating and for your questions and for your attention. Thank you.